Brilliant, thank you, Chris. Okay, so I'm going to talk to you about what's happening in the buy-to-let mortgage marketplace in the last month. So I'm going to go through the property market and valuations and mortgage lenders and interest rates. A bit about us. We don't charge broker fees, we're an independent brokerage, and we have no lender panels. So we've got good access to the marketplace, not just buy-to-lets, by the way. Okay, so valuations. Every month I go off Rightmove's house price index and see what's happened. So May last month, Rightmove reported that nationally it's up monthly 0.8, so it's quite marginal, and that's currently running at a 0.6% increase annually. So positive move, probably not as strong as it could be. And bringing it more local to east of England, that's 0.6% up last month. East of England suffered a little bit in the last couple of months, so it's still only brought it to -6 in this area. Bear in mind to remember that Rightmove, the beginning of last year, predicted a 2% drop in house prices, and it ended up at a drop of only 1%, so it's half the drop it anticipated. And this year it anticipated a drop of 1%. Who knows what's going to happen? It did also mention in this forecast this year that there's motivated sellers because it's been a stagnant market last year. So looking at the opportunities for landlords that want to go into the space of renting properties, there are motivated sellers. If houses are not selling, you can negotiate the price downwards. Potentially, if you get a down val or the property's not selling, I mean, I know loads of landlords that will just see a property on the market for 3 months and then they go in and just be cheeky offer 10 properties and whoever's taking their bids. And it's up to you whether you want to be that sort of landlord. But there's deals to be had. If you're going to pay extra on the interest rate at the moment, get a deal on the property. So, if the property needs to be able to work, there's lending out there for 85% loan to value for bridging finance, and it's currently at 0.99% monthly with a 2% fee. And obviously we're seeing a recent budget announcement with the politics that we could split the titles with a Leasehold Reform Act. Now I've been mentioning this probably for the last 6 to 9 months, and obviously finally they've confirmed that they're going to be passing this. Now until it's out there we don't know what it looks like, but if you buy a property with, say, 35 years left remaining on the lease, you've got a high street lender. Santander will lend if there's 35 years left on the lease. So still opportunities with good high street lending interest rates. Swap rates. This is how lenders buy fixed rate money from the money market. This is what it was this morning. So 4.6% is 2-year money. From last month, that's gone up 0.2, and obviously it didn't change much the month before. 5-year money has gone up this morning from last month, and obviously last month went up on the previous month, so it is kind of going the wrong way. To be fair, the election announcement has probably had some influence in that marginal increase. If you've got a remortgage within the next 6 months, you can have a look to secure the rate now, and if the rate does go down, you can renegotiate a lower rate, but obviously if interest rates go up, then you'll be paying more money. If you secure the rate now, potentially you've got the opportunity of securing it before it goes up and taking advantage of renegotiating if it does go down. EPC's rating for any buy-to-let property has to be an E, and the aim for the industry is to be A to C. They've kicked the can down the road when that's going to be, but it's fair to say there's a guesstimate of about 25% properties currently running at a D, so when this becomes raw in, I don't know, 10 years time maybe, there's lots of properties that need to come into that A to C rating. And there are currently green mortgages available. So if you've got an A to C rating, you can get a cheaper green mortgage, potentially. So let's look at the interest rates. So single let in your own name at 75% loan to value. I always compare apples with apples. So we typically do 75% loan to value on 5-year fixed rates. So single lets in your own name, 75%, limited company at 75%. 4.54 5-year fixed rate with a flat £2,000 fee. That hasn't changed from last month, but the limited company interest rate, that has increased since last month. Small HMOs went down slightly, 4.26. That small HMO is a maximum of 5 people and 1 tenancy, good for student lets, but if you've got more than 1 tenancy agreement or more than 5 people, then you're looking at the higher interest rate of 5.54 with a 3% fee. Bridging finance hasn't really changed in the last month, so for non-regulated, if you're going to buy the property to do it up to let out or to sell, then you look at 0.79% a month for the best rate with 2% fee, and regulated if you're going to live in the property, 0.84 with a 2% fee. The more works you do to the property, the more expensive the interest rate is going to be on a bridging finance. So therefore, real modest works, new kitchen, new bathroom, more works, likelihood you're going to pay more interest rates. Why use a broker over direct to the lender? We've got more products available. We've got experience and relationships working with lenders. I've been doing this 25 years. I know loads of my account managers I've known for the last 10 years. We give you advice. We work for you guys. We don't work for the lenders. And we don't typically charge a broker fee at Vincent Burch. So something we launched a couple of months ago, if you do get into bridging finance or development finance, on our website we've got a calculator that you can put in the purchase price, the cost of works, how long it's going to take you, and it'll tell you all the finance, how that finance could be structured. Now if you go under specialist mortgages on our website, whether you go to bridging and search bridging finance, or development, search development finance, there's two different sets of calculators, so it's either for bridging finance or development finance. We've got over 100 lenders on there. It includes crowd property, who these guys support. And there's rates on there starting from 0.05, so 0.55 for non-regulated business and 0.45 for regulated business. And there's a product on there for desktop valuation, so a fast offer effectively up to £500,000. But as much as there's a lot of lenders on there, 100 lenders, we've got more lenders available to us. So chances are we do a lot more lending with lenders that's not on this system. So use this calculator, it's free, have a little play with it, see what's available. So, Vincent Burch, this is us. Norwich, we've got 12 advisors in Norwich, we've got a few more advisors elsewhere, but if anyone wants to come and see us, we're just near the bus station. If anyone's got any questions, come see me at some point. Thank you. Take it off me.
Yeah. Cheers, Willie. Cool, thank you. Thanks, Vincent. So at this point, I think it's probably important